If you had $10,000 in Bitcoin at breakfast yesterday, you had about $11,200 by dinner. You did nothing. You did not click anything. The price did it for you. Bitcoin jumped from about $64,400 to a high of $72,200. Call it 12% in a day. Measured against how Bitcoin usually moves, the sharpest one-day surprise since 2023, and the first time over 70,000 since June. And almost nobody has noticed the strangest part. The man everyone on television is crediting for that move was asked on camera the same afternoon whether the government would buy Bitcoin. And he said four words that prove it wasn't him. Stay with me, because once you know what actually pushed that price, you will know something about your own savings that the headline is hiding. And I'm going to show you whose money was on the other side of that move. $3.1 billion came from somewhere. By the end, you will know exactly whose pocket it came out of, and why that tells you more than the price does. Let's start with the headline, because the headline is wrong. Yesterday, the White House held a meeting with crypto executives and the regulators. Reporters asked the president the question everyone wanted answered. Will the United States start buying Bitcoin in size? Here is his answer, word for word. Well, it's been talked about. I think I'd probably rely on Paul and the whole group for that. It's been talked about. That is not a purchase order. That is a man telling you he'll ask his staff. 4 months ago, one of his advisors promised a big reserve announcement in the next few weeks. That was April. It is late August. Nothing has been bought. So when you see a thumbnail tonight that says Trump sent Bitcoin to 72,000, you are looking at a story somebody wanted, not a story that happened. I learned this lesson the hard way, a long time ago, in a car dealership. I was working 80 hours a week in the finance office, and I kept hearing that mortgage guys worked 40 and made $300,000 a year. I said that's gotta be fake, so I did the only thing a finance manager knows how to do. I made one of them show me his pay stub. Not the story, the document. That is what we are going to do with this move. Not the story, the document. Here is the order things happened, because order is the whole case. Tuesday, the 30-year Treasury bond hit 5.338%, the highest since 2007. That is the interest rate the United States has to pay to borrow money for 30 years, and it was the highest in 19 years because fewer people wanted to lend it. Wednesday afternoon, the Treasury Department announced it would at least double the amount of its own long-term bonds it buys back, from $2 billion per operation to at least $4 billion. $4 billion is every household in America chipping in about 30 bucks per operation, starting September 9th. I covered that in last night's video, so I won't rerun it here. The one sentence you need. The seller of the bonds became a buyer of the bonds. Then, within the same few hours, the dollar fell to a 2-month low. Gold jumped 3.5%. If you held $50,000 of gold, that was about $1,700 while you were making dinner. And Bitcoin started to run. Bitcoin crossed 69,000 that same afternoon, riding the Treasury news. So the move was already running when the president said, "It's been talked about." And what he said was not a reason to buy anything. Now here's the part that should stop you. Last night, in that video, I told you something. I said the more likely story was that Bitcoin would give back most of the day's move because a lot of it looked like borrowed money getting flushed. 24 hours later, it did not give it back. It added another $3,000. So I owe you an honest accounting. I was right about what the move was made of. I was wrong about which direction it would go next. And the reason I was wrong is the most useful thing in this whole video. Let's connect the dots. Here's the number nobody is explaining. In 24 hours, $3.1 billion of short positions were wiped out across the crypto market. About 1.8 billion of that was Bitcoin alone. On the other side, the people betting the price would go up lost 277 million, 11 to 1. The losers were almost entirely on one side. Let me make that plain because short position is a phrase Wall Street uses, so you'll stop listening. A short is when you borrow something you don't own, sell it, and hope to buy it back cheaper. Picture borrowing your neighbor's lawnmower, selling it on Saturday for $300, and planning to buy him an identical one on Monday for $200. You keep the 100. That's a short. It works beautifully, right up until Monday's price is 400. Now you owe him a mower you can't afford. That's what happened to $3.1 billion of borrowed bets. The price went up, the loans got called, and the people who were short had to buy Bitcoin to close out. Their buying pushed the price higher, which called more loans, which forced more buying. That is called a liquidation cascade, and it works exactly like a margin call at your old brokerage, except it happens in seconds, around the clock, with no human on the phone. The single biggest bet that got wiped out was $48.8 million. One position, one person or one fund who was that sure Bitcoin was going down. Wall Street invented a way to lose $48 million on something you never actually owned. That takes real talent. Here's why it matters to you. A move built on forced buying is not the same thing as a move built on conviction. Forced buying is a spring that snaps. It is loud, it is fast, and it can come right back. That part of last night's video was correct, and I'm keeping it. If all that happened yesterday was a short squeeze, the right expectation is that a chunk of this gives back. But that is not all that happened. And this is where I was wrong. While the borrowed money was being forced out, real money was walking in the front door. The Bitcoin ETFs, the funds in regular brokerage accounts, took in $517 million of new money on Wednesday, their biggest single day since early May. In July, they were averaging about 170 million a day. Wednesday was 3 times that. Now do the arithmetic I always ask you to do. $517 million at about 72,000 per coin is roughly 7,200 Bitcoin, bought in one afternoon. And here's the number to hold it against. The Bitcoin network creates 450 new coins a day. That's it. That's the entire new supply. Not a policy, a rule. So in one afternoon, the ETFs bought 16 days of the world's new supply. That is the difference between the two kinds of money. The 3.1 billion was borrowed, and it left the way borrowed money always leaves, in a panic. The 517 million was owned, and it's sitting in retirement accounts and brokerage accounts tonight, not going anywhere. Leverage rents, ownership stays. I bet on the renters going home. I underestimated the owners moving in. I track both of those flows, the leverage and the ETF money, on one screen every morning, and I'll tell you where to find it in a few minutes. Now, if I only told you the good half, I would be doing what the thumbnail people do. So here is the other half, and somebody in the comments would find it in 4 minutes anyway. 1. 44,300 Bitcoin were moved onto exchanges by short-term holders during the run. People who bought recently, moving coins to where they can be sold. That's profit taking. Some of it already happened while you were asleep. 2. The analysts call this a 5.8 standard deviation move. That's statistics for "we did not see it coming" in a lab coat. Moves that rare do not usually run in a straight line. Some of this comes back. I said that last night and I'm saying it again. 3. The fear and greed gauge that traders watch just hit its most greedy reading since October of 2025. And you might remember October 2025. That was the top before the crash. 4. 1 year ago today, Bitcoin was $114,000. Today, it's 72. That is a 37% loss over 12 months, even after yesterday. If you bought a year ago with $20,000, you are holding about 12,600. A 12% day does not erase that. I'm not going to pretend it does. Keep all 4 of those in your pocket. Now let's look at what the price did not do, because that's where the real story lives. Here's the question I asked my own underwriter years ago. The first time a client tried to close on a condo with $500,000 in Bitcoin, and the system called it drug money. I said, don't tell me what you think it is. Look at the ledger. look at what it actually did. So look at what Bitcoin actually did. It went up while the dollar went down. It went up while gold went up. It went up while gold miners went up almost 9%. It did not trade like a tech stock yesterday. It traded like the thing people buy when they stop trusting the dollars in their pocket. And this morning, the bond market told you why. The 30-year bond, the one the Treasury spent $4 billion in operation trying to calm down, was back up to 5.24% by this morning. It had dropped to 5.18 after the announcement. A day later, it was already climbing back. Bloomberg's headline said the long bonds erased their gains from the buyback surprise. Think about what that means. The biggest borrower on Earth announced it would buy its own debt to hold the price up. The market thought about it overnight, and by breakfast, had started selling it again. Picture a house on your street that won't sell at the asking price. The owner announces he's going to buy it himself to keep the neighborhood comps up. For one day, the comps hold. The next day, the neighbors list their houses anyway because they heard what he had to do. That is the signal Bitcoin read, not the president likes crypto. The signal was the seller had to become the buyer, and even that only held for a day. Now bring it back to your kitchen table, because this is not a story about traders. If you have $100,000 in a bond fund, the government just tried to protect it, and the protection wore off in about a day. Every 1 point rise in the 10-year takes roughly $5,500 off that $100,000. A 60-40 retiree with $500,000 has about $200,000 in bonds. That same 1 point is $11,000, gone from the safe half. And here's the quiet part. The $4 billion the Treasury is using to buy those long bonds has to come from somewhere. It comes from selling more short-term bills. Short-term borrowing to retire long-term borrowing. If you've ever refinanced a 30-year fixed into an adjustable rate loan to lower the payment, you know exactly what that is. The payment drops today, the rate resets later. I'll do that whole mechanism tomorrow because it deserves its own video. For tonight, the point is this. Every tool they reached for this week has an owner. The bond has an issuer that can buy it back. The dollar has a printer that can make more. The ETF has a sponsor. Even the gold that did so well yesterday has to sit in somebody's vault. Run the question on everything you own. Who can make more of this? Your bonds? The Treasury. Your dollars? The Fed. Your stocks? A board of directors, any Tuesday. Your house, which I like, sits on a lot priced in those same dollars. Gold. Nobody can make more of the metal, and I respect that, but somebody owns the vault. There is one thing on Earth where the answer is nobody. Bitcoin. 21 million coins. 450 a day until the schedule cuts it again. No meeting can change it. No secretary can double it. There is no Bitcoin buyback program because there is no Bitcoin issuer to run one. No servers, only a protocol. That's why yesterday's 12% is the least important number in this video. 72,000 is a price. 21 million is a rule. Prices move. Rules don't. Here's the habit that changed how I see all of this, and I'll give it to you for free. Years ago, I stopped measuring houses in dollars. I measured them in gold, and then in Bitcoin. And the houses weren't going up anymore. They were going down. They were only going up in dollars. Change the denominator, and it changes the equation. Do that with yesterday. In dollars, Bitcoin went up 12%. Flip it. In Bitcoin, the dollar went down about 11% in a day. Same event, different sentence. One of those sentences is exciting. The other one is the one you should be thinking about. Because the dollar is what your pension, your social security check, and your savings account are written in. Nobody on television said it that way yesterday. They said Bitcoin pumped. What happened is the dollar got measured against the one thing nobody can print, on the exact day its issuer had to start buying its own IOUs. And the measurement came back ugly. The Bitcoin and gold prices I just gave you are live on the Macro Command Center at timtalksfinance.com/members right now, on the same screen as the 30-year yield, so you can watch for yourself whether they keep moving together or split apart this week. So what happens next? I don't know, and neither does anyone with a microphone. There are no certainties here, only probabilities. So here are the two honest scenarios, and you can decide which one you're watching. Scenario 1. This was mostly the spring snapping. The borrowed bets got flushed, the short-term holders sell into it, and Bitcoin gives back a good chunk of the move over the next week or two. If you're holding, that's a normal week, not a warning. If you're thinking about buying, that's why nobody should ever chase a 12% day. Scenario 2. The bond market keeps refusing the Treasury's help. The 30-year climbs back toward 5.3. The dollar keeps sliding. The ETF money keeps arriving at 500 million a day instead of 170. In that world, yesterday was not a spike. It was the first day the market started pricing what it means when the seller of the bonds has to be the buyer. Here's the one signal that separates them, and it is not the Bitcoin price. It's the 30-year yield. If it's back above 5.3 by the time the Treasury runs its first $4 billion operation on September 9th, the bailout failed and scenario 2 is live. If it's sitting calmly at 5.1, the plumbing worked and scenario 1 is the story. Write that date down, September 9th. I already have. One line to take with you. The president said, "It's been talked about." The bond market said something louder. The seller had to become the buyer. And Bitcoin moved on the second sentence, not the first. Free, no credit card, 2 minutes. The Macro Command Center at timtalksfinance.com/members shows you the same live Bitcoin, gold, and 30-year numbers I used tonight. And the money quiz shows what inflation is quietly costing your cash in dollars per year. I built it so you don't have to figure this out alone. Tomorrow, I'll show you where the $4 billion actually comes from and why it looks a lot like a loan I refused to sell in 2006. I'm Tim. I'll see you tomorrow.